Meta now has had zero return since 2015. Zero. It's been dead money. It went up and it gave it all back. And and if you look at the charts, if you look at all the FANG charts, they look like the classic bubble chart, right? They had the jump, then they had the drop, then they had the parabolic move, then they dropped, then they had the return to normal. And then it's just been straight down. And the reality is, my little thing is FANGs bite, right? It's their nature, right? FANGs are going to bite eventually. And it literally is the parable or story, a parable, I guess it's a story, of the emperor has no clothes. These companies, yes, they are really good. They are profitable businesses. But the reality is their revenue growth, just by the law of large numbers, was declining. And so when your revenue growth is declining, okay, you can't give it an increasing multiple, right? You just can't. That's not the way math works. But when there was some other stupid person who would pay more than you did, you're like, oh, good, I'll sell to you. And then I'll sell to you. Then I'll sell to you. Then I'll sell. And so we had this escalation. And it's not over, right? FANGs have broken, but there's a whole bunch, which we'll talk about in a little bit. But that's a long-winded way of saying these are some of the best, have been some of the best companies in Web 2. Right? Yeah. They've built $1 trillion+ empires. But the reality is that trees don't grow to the sky. You can't grow at double digits forever. And why would you pay 20, 30, 40 times earnings for a company that's growing 10, 6, 4, 2%? And the thing that makes me really angry is we talked about this 90 days ago when Microsoft earnings came, because we can talk about Microsoft too. Microsoft had bad earnings, went down a bunch. They're like, oh yeah, our revenue growth slowed single digits, but by the third and fourth quarter, it's going to be 14% again. And I said, no, it's not. There's just no chance that's going to happen. It didn't. And so it went down again. So we got all the activist investors and all these people who write these letters and say, you should maximize cash flow to shareholders. Kinda. You're supposed to maximize value to shareholders. And if I cut all my corn and I don't harvest any seed and I don't plant, there's not going to be any corn next year. Okay? Planting new seeds is really important. And I will say that the conventional wisdom on what in hindsight turned out to be some of the great moves in business history looked really stupid at the time. I talk about all the time when Google first came out, and they're like, okay, we're gonna redefine search. And people are like, what are you talking about? Search? It's done. You're number 21. What do we need another search engine for? Right? We got Alta Vista, we got Web Crawler, and they're like, watch. And stock went boom, boom. And I've told the story before, right? They went public at $100 and collapsed to 50. And my value manager, hedge fund friend said, see, I told you it's going down. And I'm out in California talking to this guy, and he said, Mark, are you out of your mind? He said, this is a $1,000 stock. I'm like, oh, come on, Glenn, please, $1,000? He said, Mark, they're changing the world. And sure enough, they did. Then in 2005, they bought Android.
Yep.
And cover story of Business Week. Oh, these guys are idiots. What are you wasting money for in an operating system? What do you know about operating systems? Now they have 80% market share around the world. So I'm willing, for a minute, to say getting people engaged in the metaverse and having a conduit to get revenue, either through gaming subscriptions, or I can look around my room and I can buy that, I can buy that, I can buy that with just a head nod. I'm willing to think that's a good investment. That it's not an expense, that it's an investment. Now, I'm not going to let him do what Adam Newman said. Oh, that's not really an expense. That's like almost like revenue. No, but I won't let him do that. And I'm not saying he is, but I'm not sure. Actually, I'm sure that he's going about it a little bit wrong-headed. Just because, and part of it is because now I'm immersed, pun intended, in Web3, and I talk to all these amazing founders. Michael, I love my freaking job. It is so awesome to talk to these people who are envisioning the future, right? Literally envisioning the future and how we'll interact. And the idea of a centralized metaverse called Meta. No.
Yeah.
Microsoft, most valuable company in the world in 2000, 84% down for almost 20 years. Didn't get back. And then they had to have a change at the top. They had to get rid of the old and bring in the new. And the new CEO is cloud. We're going to the cloud. And people are like, no, you're a laptop company. You're a desktop company. Nope. Future is the cloud. And boom, unbelievable outcome. Yeah. But at the time, people were like, no, that's idiotic. And so I'm willing to cut him a little bit of slack. And here's the thing. You know that I believe this, that an investment committee should be an odd number and 3 is too many. There is no better decision maker than a single person. Full stop. That doesn't mean they always make good decisions, but the decision-making apparatus that is superior to all of them is a single person.
Yeah.
Just full stop. So I totally actually agree that the voting structure is suboptimal for total shareholder harmony. But I do believe, as long as you have a caveat that the other group can remove a crazy person. Like if somebody's doing stuff over and over without the results and destroying value, you got to be able to get rid of them. But if they keep making decisions that turn out to be good, as I said, if it were me, which is not, and I'm not a multi-billionaire and I'm not Mark Zuckerberg and I think I'm as smart as him, but I would at least listen to the world saying, you're the antithesis of what we want for Web3. We don't want you. We don't want it. We don't want centralized.
Yeah.
Okay. Then how about I be the tool company? How about I be the enabler? How about I be the playground where you great innovators come? That's maybe the tack. I was looking at a couple of these companies. There are a company like Meta, which is now arguably cheap, right? Real company, real revenues, not growing really fast, but real revenues, real profits, like billions and billions of profits. And then you got Apple, again, real company, not growing very fast. In fact, without share buybacks, really not growing at all. So you probably shouldn't put a big multiple on it. Okay, decent. Not innovating like they used to. Tough when you don't have the same visionary founder or leader. Good company. But then the problem is you go down one layer. These software companies, cloud companies, they're still, and it's boggling my mind, still trading at 8, 10, I saw one 20 times revenues. Because you can't trade them on earnings because they don't have any earnings. And when you look at their charts, their revenue growth is actually slowing. It's still growing, but it's slowing. But their losses are accelerating.
Yeah.
And people are like, but they're down 80%. They got to be cheap. I'm like, no, they're nowhere close to cheap. And it makes my head hurt to listen to the contortions that you have to do to justify these valuations. And I think what the Fed did, and we've talked about this a lot, is the Fed said, you know what? There is irrational exuberance. They didn't use that term. That was the Greenspan term. But there is irrational exuberance. And we just need to bust it. We need to bust it. And man, did they bust it. Because to your point, there's a lag effect. But man, look what's happened to the housing market. We joked, I'm sitting in this house, it's up 40% in the last 12 months, according to Zillow. Oh no. If I tried to put that on the market for that level, 0 bids. There would be 0 bids. And housing prices are tumbling. We doubled mortgage rates from 3.5 to 7 on the 30-year. And I saw a stat yesterday that just boggles the mind. It was a comparison of how people who want to buy a new house had collapsed. But more importantly, the number of people who were willing to sell them a house had collapsed even more. Because they're stuck.
Yep.
You can't move because you know you can't afford a new mortgage. You've got this 3-4% mortgage. Whew, as long as the teaser rate doesn't go up, which it will. And this is the part I got in a debate with a guy over, it was a good debate. And I love debate, obviously.
Yeah, me too.
But it was a good debate on Twitter. Not the bad, like, you're a fucking idiot. It was a good debate. And
there's plenty of that too on Twitter.
There's plenty of that on Twitter. But there was a good debate saying, I know you think Netflix has got problems, but it's a little luxury. And people aren't going to get rid of the little luxuries when times are tough. I totally agree with you. Except if your mortgage just went from $2,000 a month to $3,000 a month, and that is not an exaggeration. That is a real number of an average home using a teaser rate that gets adjusted in the current 10-year environment. That's a lot of little luxuries. $1,000 a month? Whose income went up $12,000? I don't know very many people. I know we've talked about this. I know there are people who think they deserve a raise that big, but no, because companies are actually slashing payrolls. So I'm not anti-Netflix, and it's actually bounced nicely off the bottom. It's almost doubled off the bottom. The DOJ this week launched an investigation into pension fund holdings of crypto. Like, are you joking?
Are you kidding me?
Are you kidding me? Okay, remember, 83% of pensions have zero. Okay, so you're talking about, you're going to investigate the 17% that do, and their average exposure is sub 1%. The losses on crypto are less than the period from 11 to 12 midnight last night on Amazon. And like, total.
Yeah.
And so the idea that you should investigate that decision relative to the decision to have 7% of your portfolios in Apple and 6% of your portfolio in Amazon and 4% of your portfolio that's now 1.4% of your portfolio in Meta, horseshit. Horseshit. This is the then they fight you phase. This one really gets me viscerally angry that not gonna do an investigation of passive investing, which is simply momentum investing, which is simply concentrated portfolios of Ponzi's. And when they unwind, Peloton, you tell me that you're not gonna investigate Peloton losses? It's down 95%. 95. There's a point where people had it's a stationary bike with an iPad bolted on, and they had it like $40 billion value.